Alrighty. Let's take a look at the market. We're going to look at the weekly, the daily, and the trade of the day charts. So this is the first day of the week, Monday. So we're looking at the weekly chart right here. You can see this little candlestick. You know what? Let's make this bigger. Let's make it bigger so everybody can see it. Yeah. Weekly chart. Looking at the S&P 500 futures here. First day of the week, but this is the weekly candlestick right here. So far the range for the whole week has only been about just shy of 33 points. Don't forget we got January 14th cycle low that's estimated here, which is a little less than a month. Of course, we got Christmas and New Year's in there and some other days that might be half trading days and stuff like that, depending on, if you look at the futures calendar, we'll address that as we get closer to Christmas. And then there's one way out here, March 31st. Just keep that in mind for both these cycle lows. Okay, looking right here at the SMI, sitting right around 89. And that's pretty high. We've been talking about for the weekly. We'll talk about price and stuff like that when we get to the daily chart, but you can see right here, this all-time high right here on the futures. So we're really close to that. And there's still a chance, of course, we could break through that. Now here on the MACD, it's sitting at 99. So I've talked about this before, but for anybody who's watching maybe the video for the first time or haven't watched the videos in a while, just take a look at that circle right there and I'll look way back here. It was as high as 138 on the weekly chart. Right, so inside that circle right there, pay attention to that, 138, yeah. So the MACD could go up more. I mean, it could literally go up for a few weeks even. If you look back here, let's see, where was 99, 94, yeah, somewhere like this. It's 94, and it went 1, 2, 3, 4, 5 more weeks before it pulled back. So that's very possible. Did even know the SMI is really high right here. It's sitting way up here. You know, the MACD is wide and it could run, right? It could run for a while. Not saying it's going to do that, but we have to be at least aware of the fact that it could do it, right? Okay, down here on the Big Daddy forecast, 446 on the weekly last week. That is very high. Very high. So I could see a pullback potentially happening into this January 14th. You know, though I think this one over here is really the one that's going to have more impetus, as they say, to the downside, you know. So the January 14th one, you know, there's no guarantee the market is going to pull back in there, though it probably will. But remember the December 10th one, which was back here, it didn't do anything. It just tracked sideways and went boom. So we'll pay attention to that. But for right now, there's a sense that there will be a pullback here because overall the market is really elevated. And I said last week, the only thing keeping this market going is momentum. Because all other data, everything else, all my other data is saying we're pulling back. But so far the market has been very resilient. Okay, let's look at the daily chart. Okay, so here on the daily chart, you can see today it got as high, daily chart, got as high as 48.02 and a quarter on the futures here. And of course, all-time high is 48.08 on the futures. You know, this number, all-time high, is a little bit different intraday for SPX and some, you know, depending on what product you're following, the SPY, you know, they all have slightly different all-time highs, but basically this is all-time high for the futures right here, okay? And that's this candlestick right here today that just closed. This little red one that's going on right there is the one that's already opened up for tomorrow. See if I can make this a little bigger. Okay. So it's banging right up against this thing 1, 2, 3, 4 days here of just the top of these candlesticks just kind of pushing right up against this 48.08 number. You know, just sitting right there, right at this line, 4,800. SMI is very elevated and more divergence showing up here. And if you want to know what all this means down here on the universe data, well, become a member. If you're interested in that, stick around to the end of the video and I'll show you how to become a member. But yes, this data down here in this graph is relevant to how I trade. Yeah, I use it and I convey my opinion about it to the members. Okay, so on the MACD here on the daily though is very elevated. This is very, very high sitting up here. I think this is, like I said last week, I think it was the third highest last Thursday or Friday in the last 5 years. And now we're sitting way up here near 88. This is going to be pretty close to the highest it's been in a very long time. For the last 5 years, probably on the daily anyway. So it's way up here at 87. Yep. Yeah, back here was, I remember back here, let's see, where was 77? I think I saw 77 here. Yeah, back there at this candlestick right there was 77. Even at that time, I was saying that was the third highest MACD that I had seen in 5 years. So where we're at right now, yeah, we're in the super duper nosebleed section in the bleachers. There's no oxygen up there. It's just amazing this market's able to stay and keep on pressing higher, but that's what it's been doing. Just inching higher, little by little. This next cycle low, let me get, I'm looking at the wrong chart here. Drawing set. So the next cycle low on the daily is January 8th. And then there's January 16th. So really, I think this one over here, January 16th, is the one that lines up with the weekly. So just based on this plus what the weekly showing, I would expect a decline. Because we've got agreement on the weekly and the daily charts, approximately for the second week of January. So somewhere in this area, from now all the way through the second week of January, I could see the market pulling back. Now, it doesn't mean it can't go higher first and then do this, or start to fade right away. I don't know. That we have to wait to see. Okay, lots of divergence going on here in the daily. Again, just divergence all over the place. Yeah. Okay. All right, let's take a look at a position that I did today. Right, so this was just a little scalp that I did right after intraday close. And I told my members about this trade because the market today was, it was kind of a smallish day. I think the range was like 32 or something like this for the day, so it wasn't that big. But it was a green day, and I was pretty busy doing some other stuff. But on the hourly chart, I had forecasted that there would be a cycle low going into the close, right, between like 3 and 4 o'clock. The futures close at 4, intraday closes at 3. So I was kind of aware that there might be a little bit of pullback going into the very end of the day. So I took advantage of that, and I had 2 contracts that I traded here, and made a quick little scalpy trade for 190 bucks approximately. Now what you're gonna notice is I did 2 contracts earlier, and then 2 more contracts. My timing was a little bit off earlier in the day, but I managed to get back into green and make some profit. But you'll notice that I traded 2 contracts here, so I'm just going to talk about this briefly. So, these are the E-mini futures, the ES futures. So what's happened is, when I first started trading years ago, it's supposed to be an S905, I traded the MES, which is the micros. I traded a lot of this product when it first came out, whatever it was a few years back. I trade a lot of the micros because my account size, this is all I could really trade. But since my account has grown, I've slowly built up my account and just kept trading and trading. And, it's not that every trade was a perfect trade and made money. There were some losses, but I was making more money than I was losing. It just kept going. And now today, I had a bit of a breakthrough and was able to trade 2 contracts, 2 E-minis. So why is that a big deal? Well, E-minis, if you just get a couple ticks worth of movement, it's a few $100. It's like you can make money very quick. You can lose money very quick too, but using my service on the hourly chart, the 15-minute chart, and the 5-minute chart that's provided to the members, I look at the same charts I look exactly at the same streaming charts the members are looking at, and I use it to make my own trades. So that's what I did at the end of the day, and took advantage of the hourly chart. And we'll look at the trade of the day here in a moment. But I just wanted to talk to the members, and to the public for that matter too, but it's a really good idea to have a plan about how you're going to build your account. It is, for young people, this can be a kind of a little bit of a mystery and a bit of a challenge because, a lot of young people like to spend money and like to live kind of fast, and their account sizes are generally small. The younger you are, usually the smaller your account is. The older you get, usually your account gets bigger because you had, many decades hopefully to build up your assets. So when you're trading, you want to, and I've talked about this before, it's really important, you want to parlay your profits into something that's going to be another asset that's going to sit in your account. And I don't really like the idea of just holding on to stock. I mean, I'm not saying it's bad. If you really have a good sense that a stock's going to go up, that's great. But fixed income is probably a really good way to go. It may be a little slow, but it's a really good way to take your profits, parlay into fixed income. Inflation's high right now. If you wanted to have CDs, that's one way to go. I like corporate bonds personally because they have really good long. You can find corporate bonds with maturity dates that are way out into the future. That's great for retirement. But in any case, regardless, it's a good idea to build up the assets in your account. And cash is, everybody thinks cash is great. Have a lot of cash in the account. That's not really a good idea. I'm not saying cash is bad. There's times to be in cash, but you really want assets because then you can borrow against these assets, right? While they're, let's say, in my case, a lot of corporate bonds, they're earning interest. And I'm getting interest put into my account every time a corporate bond pays. Okay. And I can also borrow against them for margin to trade, in this case, E-mini contracts. So that's how, one of the ways, there's other ways you can do this, but that's one of the ways you can just begin to build your account, keep building over a period of years, and get your account up to the place where it's large enough to where you can be trading, multiple contracts for futures, okay? Because like I said earlier, just a few ticks of movements in the futures for the E-minis is pretty big money. If it moves 3 or 4 ticks, that's, I think 4 ticks is like $100. That's in other words, what I mean by ticks, each of these prices in here is a tick. Okay, so let's just say I took a position right here at 47.89 3/4. Okay, well, if it just moves this much with 2 contracts, that's $100. Each of these would be $25. I'm sorry, wait a minute. Yeah, $25. So the market only has to move a very tiny amount for $100. Now, I'm not advocating go around and just keep jumping in and out of trades for $100, but my point being that even in really tight markets like we're having right now, I mean, scalps can be, I'm not saying they always are, but they can be fairly easy to make some profit, okay? And then when the market's much more active and there's more range, well, you might see 20 ticks, right? This thing might go, you might pick up a huge, you could pick up a couple $1,000, $1,000, $2,000 pretty quick because, you now have more margin because you have more assets. Your margin is there so you can trade and make bigger trades. You're just really scaling is all you're really doing. You're taking the same type of, if you're a successful trader, you're earning and making profit more than you're losing, that's good. You're on the right track. All you're doing is scaling it up. That's all you're doing. So keep that in mind. If your account is small and you're just trading some options right now, or you're trading maybe the E-micros, you want to, don't just leave cash sitting in your account. I don't think that's a good idea. Okay. The ultimate way to go is really a 401k or an IRA. You put the maximum in there that you can per year, and you trade in that account because that's tax free. And some IRAs, I believe, will let you trade futures. I'm not sure about all of them, but some of them I think will allow it. Okay. But those are the kind of things you can investigate and check out before you decide to just go, everything into an IRA. Just make sure you understand what what you're doing. Either way, an IRA or a 401k is a great way to go. 401k is really great, especially if the employer is contributing and matching you. Okay. But the whole point of this section of the video is to convey to you, in my opinion, it's really good to build up assets in your account, not cash. Some type of fixed income. Just keep building it up, building up, building up. Leave it in there. Let those maturities be way out there. Don't be afraid of it. 20 years, 30-year maturities. Just keep building up your account. Then what's going to happen is you're going to move from maybe some options or e-micro futures, and you can start taking on some e-mini futures or whatever other. There are a lot of different ways you can go to obviously bolster your account and keep be profitable. But there should come a point throughout your life to where your account's really starting to get to that point where you can really start leaning into it and start making some really nice profit. Okay, and brokers love to see fixed income sit in your account. Especially if it's kind of like mid-grade or high-grade bonds. You can borrow against those all day long. Okay. All right, let's look at the trade today and finish up the video. All right, we're going to look at the 15-minute chart. There's also one on the 5-minute chart. But we'll look at the 15-minute chart here because they're both really good trades. We'll just look at this one. This is the 15-minute chart. This was early this morning pre-market at 5:45 a.m. Okay, really super nice. This trade is the reason I'm picking this trade is because it's one of the easier trades to explain, and it's one of the it's one of the easiest trades to be profitable on. Now, this is the GITIS Plus indicator. Some of you are probably already familiar with this, but if you're not, this is my own indicator, has my own logic built into this indicator. So whenever we see this green, yellow, orange configuration going on, really the orange triangle is one we're focusing on here. It's saying to us that there's potentially a trade here. So the GITIS Plus indicator, indicated there might be a trade here at 5:45, I think it was this morning. Yep. And this one's really super simple to trade because you can see the SMI, which stands for Stochastic Momentum Index, was already well below the bottom line here. And as soon as it begins to make its curl up, this is just a go. And you can see on the MACD here, it's just flat, super flat, just sitting there flat. And that's not actually a bad thing because that means that this indicator right here, the GITIS Plus indicator is saying there's a potential trade. The SMI is giving you the direction that things are going to go up. The MACD is not telling you good or bad, just flat. That's great. We don't have to worry about it. This is all the information you need to make this trade. And look at this thing. It just took off. Okay, even if you just got out up here when it started to pull back at 47.90, that was a good 10-point move. Okay. But a seasoned trader is going to pay attention. And, if you're a beginner trader, that's fine. Take the 10 points. That's a lot of profit right there for the day. You're done. You don't have to trade again for the rest of the day. Okay. For a seasoned trader, what I would do is I'd pay attention to a few other things. And I would notice that the on the SMI, it's elevated, sitting up here near the top line. And I'm also going to pay attention that the MACD's got some separation to it. And what it's doing, it's heading up. So even though this is a bit, might make some traders a little nervous, this little pullback here over half an hour, the seasoned trader probably going to stay in there because he or she is going to recognize it looks like there's more to this than there was. It ran all the way up to 4,800 basically. Okay, but there's nothing wrong with getting out right here. As soon as this thing starts going south, you take your profit, you can re-enter, okay, and you can make the profit on some of these candlesticks here. That's two ways to do it. All right, it doesn't really matter. You can do it both ways. The second one's going to cost you just a little bit more because you have to pay commissions. Plus, your timing is rarely going to be perfect, so you're going to give up a little bit coming out and a little bit going in. Whereas if you stay in it, you don't lose this little bit of profit that's going to be in this area as you wait it out a little bit. Plus, you're not paying extra commission, which is not a big deal, but still, you're going to make a little more if you stay in it. But for beginner traders, it's fine. Get out, get back in. For a seasoned trader, you want to pay attention to, yep, it's still elevated. This is going north. Maybe just hang around, see what it does. Sure enough, it pops and it goes higher. And eventually, you get out up here as it starts to stall and just does this crazy tracking sideways stuff for 2 hours or whatever it was, more than that. maybe like 3 hours. Okay, so super simple, easy trade of the day, at least 10 points, more like closer to 15, 18 points if you stayed in it, okay? All right, so if you stuck around to the end, that means you want to become a member. Great. There's instructions right below this video on YouTube. Make sure you read the instructions very carefully so you don't have any problems joining. Once you follow those instructions, you're going to click on the link. It's going to bring you over to Get a Server. Then you're going to click on Server Shop. It's going to bring you to this page. Only $7.99 a month, okay? I think probably the majority of my members right now don't even think about this. They just view it as coin. You know, their profits that they're making off of trading, it more than covers the membership. A lot of them have DM'd me, and some of them just, you know, a few talk to me just over the regular chat channels, but a lot of them DM me and, you know, and ask me my opinion about some things. And I know some of them were trading, you know, some pretty small trades because they're getting used to the service, and they've recently have bumped up their trades and maybe taken on a little bit more risk because now they feel comfortable. They know how to use the service, incorporate it with what they're doing, and they're making even more profit. So my opinion about this, I'll talk about what does the service include in a moment, but my opinion about all this is, if somebody were to ask me, you know, about the service, I would say, you know, invest in yourself a little bit here, right? Spend 2 or 3 months, pay for the whatever it is, $25 for 3 months. I wouldn't trade the first month. I'd pay attention to the nightly emails, which, you know, if you want to be on the nightly email, when you join, you're going to put your email address right there in the emails only channel, and then you'll get the nightly email, which includes the S&P 500 chart and a few sentences of my opinion about what the market's going to do. Okay, but in addition to the emails, I would also say you want to understand what cycle analysis is. That's going to be both on the daily chart and on the hourly chart. There's cycles on there. You're going to want to have a kind of an understanding how to make use of the Get Us Plus indicator that we saw in the trade of the day, right? When that indicator comes up, you know, how do you use it? Do you just make the trade right away? Like today, you'll notice I didn't say just go make the trade. Don't worry about it. I talked about the SMI, I talked about the MACD. Those are things you want to learn so you can time your trade, yeah, and you can maximize your profits. And that's how I would, if somebody was coming into the service for the first time, I would say don't trade for the first month. Just learn the service. Okay, watch the videos every day, understand the trade of the day, and then if you're going to start trading, I'd keep the positions really, really small and just learn how to become profitable. Don't try to go all in. This is not poker. This is not the lotto. This is you becoming a better trader. All right, let's talk about the service. What does it include? Well, you get streaming charts. So when you join, you can come down here, click on the S&P 500 stream, and in there, you're going to see the 1 hour chart, the 15-minute chart, and the 5-minute chart. They're going to have the Get Us Plus indicator on there. The 1 hour chart's going to have the cycles on there that I talked about, and the other indicators, the SMI and the MACD. Okay. Whenever that Get Us Plus indicator does signal that there might be a trade, it sends an alert over to this channel here, the S&P 500 alerts channel. So on this channel, you just right click on this channel and you set notification on, you'll get alerted. So if you're not watching the stream because you're busy, you can still get alerted on the app. And like I said, make sure you read the instructions before you join, but this app can be loaded on a desktop PC, can be loaded on a laptop, and it can be loaded on a mobile phone or a mobile device. All right, so that's pretty cool. These work together really nice. I use it all the time. Okay, now there's other alerts that come in. These right here, all these are alerts also come in. They don't have streaming charts, but they do have alerts. So gold alerts, crude oil alerts, top 30 stocks for the S&P 500 and the NASDAQ. And then if there's a symbol that has a daily, on the daily chart, the Get Us Plus indicator has an alert for that. If it comes up on that chart, then it'll go into this channel. All right, and the premium symbols, this is future symbols are in there that I put in there every day that look like they're a good trade. Stocks that are optionable, stocks that look like or symbols that look like they could be getting ready to be shorted, and industries. So anywhere from 2 to 4 files of symbols could be in there, depending on what the market's doing. Okay, currency. Occasionally I trade currency. This could be something like the British pound. I usually trade the futures. I don't really do Forex that much. I've done a few times, and normally I'm trading futures. But I trade like the Aussie dollar futures. I might trade the euro dollar futures. Okay, maybe even occasionally the Japanese yen. All right, talked about the emails already. This channel, I do keep track of some solar activity. That has a lot to do with that universe indicator. So if you want to know more about that and how I incorporate that into the nightly email, you'll know when you become a member, okay? Fixed income, remember I talked about corporate bonds. Brokerage firms love to see assets building up in your account so that you can leverage those assets for margin to trade things like E-minis and other things, okay? So occasionally, if I'm buying a corporate bond, I'll put it in there and say, hey, look, this is what I'm doing today. I'm buying this corporate bond. This is why I'm buying it, because I think it's a good value or whatever. Also, and there are some CD rates, and currently I have a savings account that's paying me over 5% because inflation is so high, so that's also in there. Okay, and then these two channels, we just talk general chat stuff. If you have any support issues, if it's for email, put it in here. If it's a support issue, all the support issues, make sure you put it in member chat. Don't put it in the general, put it in the member chat. Then S&P 500, you can also just regular chat, whatever you want to, just people want to talk about stuff in there, that's fine. And the S&P 500, chat usually reserved for the S&P 500. This is the only channel that's open to the public. It's really just, there isn't anything in there. It's just like, hi, how are you? Welcome to the server kind of thing. Okay, the last thing I want to talk about is the rules. Please read the rules. So in here is the be nice to everybody else rules. Okay, don't force me to kick you out. Okay, if you're going to be nasty, come in with an attitude, ego, and all that stuff. Then you're gonna hear from me. Okay, so please be nice to everybody else. There's also a disclaimer in there that I'm not a financial advisor of any kind. I strictly give my opinion only. And also, there's a refund rules. Okay, so make sure you read the rules. Okay, like I said, if you want to join, read the instructions, click the link, come to the server, hit server shop, $7.99, really good value. All right, happy trading, everybody. God bless everybody. We'll talk to you all real soon again next time.